Well, good afternoon, and thank you for joining us today for this virtual report rollout on China's digital currency, adding financial data to digital authoritarianism. Welcome to the Center for a New American Security. Before we get started, just a few logistical issues here. If you have any technical issues with Zoom, please reach out to Jason Bartlett at jbartlett at cnas.org for technical support. He also will put in a message with his email address so you can reach out to him there. It's right there. This event is a Zoom webinar. All participants are automatically muted and we can't see you. We will be taking questions later on, but we also want to encourage you to ask any questions at any point during the event using the Q&A function that's in Zoom at the bottom of your screen. We'll also remind you a little bit later when we shift to the more open Q&A session once we finish with our interactive polling portion of the event. Today's event is occurring alongside the release of a new CNAS report titled China's Digital Currency, Adding Financial Data to Digital Authoritarianism, co-authored by myself and Emily Jin, a research assistant here at CNAS. You can download the report now. It's available, and we'll put a link in the chat for you to take a look at it if you haven't seen it yet. We've got a great lineup today of panelists, and I won't go into their full backgrounds, but let me just briefly say a few words. We have Matthew Johnson, who's the research director of Garneau Global. And incidentally, Matthew co-authored a report also on China's digital currency for the Australian Strategic Policy Institute just really a few months ago. We also have Linda Jeng, the visiting scholar on financial technology at Georgetown Law's Institute for International Economic Law. And Linda has a wealth of experience working with the international banking policy and with the Federal Reserve. We have Emily Jin, as I mentioned, the co-author of the report and a research assistant here in the Energy, Economics, and Security program at CNAS. So before we begin with our panelists, Emily and I will just offer just a few opening remarks. One, let me provide the broader context of this report. It's really part of a bigger effort that we're doing here at CNAS on countering high-tech illiberalism, basically the Countering High-Tech Illiberalism Project, looking at how the US can counter the use of technology by authoritarian and illiberal actors that are trying to advance their political goals. And this report fits into really a look at fintech, financial technology, as part of that. And the report does a few things. One, it provides a very in-depth look at China's domestic and international ambitions in developing a central bank digital currency. And the China equivalent is called the Digital Currency Electronic Payment, or we'll say DCEP for short. So that's the CBDC that the People's Bank of China is developing. So our report, it reviews the technical framework of DCEP and how the PBOC and private firms are working to implement it. We discuss ways that this project actually adds to the CCP's or the China Communist Party's authoritarian toolkit. And although DCEP has gotten a lot of coverage, press coverage, media coverage, even internationally, I think most media reporting hasn't really addressed how it fits into the CCP's broader political and economic strategies. And I think that's one of the big aims. That's what we do with this report. And only recently, I think, have policy research institutes started to go into that. And I would sort of flag Matthew's report from ASPE a few months ago as really groundbreaking with that. And we have some key judgments. One, we through the research, we looked at the motivation. We understand that Beijing is motivated by a few things. One, a desire for the DCP. It's motivated by a desire to harness the private sector's advancement in financial technology, in fintech, and to give the state more direct influence in China's financial ecosystem. Also, there's a motivation to develop, and this is a broader strategic economic aim of the CCP, to develop a more intelligent economy. And fintech is really part in the way that we see the CCP seeing it, that financial technology is really a part of geopolitical competition. And although some of the details are scarce around the design of DCEP, the key principles are pretty clear. Namely, and probably most importantly for our discussion, is PBOC control of user data. One of the things that I'll flag at the beginning of our talk here is that we discovered a really interesting PowerPoint presentation, and in the report you could see page 12 of the report. There's a link to a PowerPoint presentation that we found that lists, it's from 2018, and we'll drop, you can actually see the link in your chat box right now. This is the PowerPoint presentation slide, which is up right now. And if you look at, I think it's page 22 of the actual slide, you can see the discussion of, or the presentation of, controllable anonymity. And it really shows that the PBOC, the central bank, would have full control of user data, transaction data from top to bottom. And so before I shift to Emily, I want to say one thing about the context, how to think about this report and this discussion. Um, I would say that that DCEP is not just about money and banking. That really the focus here is data. And there was a quote we found in the report where a previous PBOC senior leader said that the financial industry is basically an information industry, right? And these terms come up in our research of informatization and intelligentization, right? These are words that the CCP uses in some of its strategic documents to talk about how it sees the economy. So we're talking here about the forward direction is to wrap the economy and all relevant institutions around data. That's really what DCEP in our mind is about. So I want us to keep this in mind, and I want to hand off before we go into the poll questions, because this is going to be interactive. I want to hand off to Emily for some additional framing thoughts about the report and our findings.
Thank you so much, Yaya. First, I'm going to discuss the developments so far in the testing and implementation of China's DCEP or DCEP. As far as our research indicates, China's DCEP will have a two-tiered structure with its central bank, which is the People's Bank of China, managing the end, whereas state firms are implementing the front end. Managing the back end, excuse me, where the state firms are implementing the front end. For example, the big three network operators are distributing the DCEP, including China Telecom, China Mobile, and China Unicom. And the big four banks are ICBC, Bank of China, China Construction Bank, and the Agricultural Bank of China will be implementing. And private sector actors are also involved. So far, there have been pilot programs that have already dropped in 4 cities, Shenzhen, Suzhou, Chengdu, and Xiong'an, and with the state-owned banks implementing, and tech companies such as Ant Financial and Tencent's WeChat Pay facilitating access to DCEP. And there's some other firms that are also involved, including JD.com, Meituan, and Didi. The PBOC has announced the 2022 launch date, which would be in time for the Beijing Winter Olympics. The 2022 timeline is challenging for a full rollout, as a more realistic timeline will probably span a few more years. I would also like to emphasize that DCEP has the potential to amplify CCP party control through universal access to financial data. A successful DCEP very likely would bolster Beijing's endeavor to leverage artificial intelligence and big data for stronger domestic surveillance. Moreover, the Central Commission for Discipline Inspection, abbreviated as CCDI, is already working with the PBOC and has identified China's DCEP as a tool to prevent corruption and misconduct by party members. We've found through our research that the CCDI has actually dispatched a team to embed with the PBOC in working on the DCEP. So this shows a really close relationship between the CCP's internal control organ and the developments in China's digital currency and electronic payment system. If the Chinese government is successful in exerting domestic control, this will make the DCEP's model of internal control more attractive to other nations exploring their versions of central bank digital currencies. So this brings us from a discussion on internal control to the external appeal of this model, which is perhaps the most crucial geopolitical implication of China's digital currency development. China could export the system once this is proven successful to other countries that want more internal control and surveillance capability, and ultimately undermine global standards around financial privacy and political freedom. The last point I want to make here is The Chinese government has ambition in promoting an internationalizing the RMB, although it has structural rigidity issues such as strict capital controls that hinders its internationalization goals. Success in DCEP would not necessarily drive RMB internationalization, but Beijing will likely pursue internationalizing DCEP adoption anyway. Some examples including compelling foreigners in China to use DCEP wallets or encouraging Chinese people abroad to use DCEP wallets to pay for Chinese goods. So this concludes our takeaways. I will hand it back to Yaya now to kick off the interactive portion of our event.
Thank you. Thank you so much, Emily. So with that overview, let's turn to our panelists, and we're going to do this a little bit differently. So what we're going to do is we're going to actually ask you, the audience, some questions. We have a few polling questions to spark the discussion or to initiate the remarks from our panelists and from Emily and myself. So what we'll do is we will first put up the question, and after the results, once you see the result, then our panelists will provide remarks that will be connected to that question. So Emily, can we go ahead and put up the first poll question? All right, so the audience, hopefully you see that there. Here's your first question. We'll give you about 30 seconds to go through it. US policymakers should be concerned about China's digital currency, DCEP, because of, we've got three choices here. DCEP's potential to rival or displace the US dollar in international trade, DCEP's potential to increase CCP's domestic control, especially over dissidents, and potentially export this control abroad, or C, DCEP will make China much more attractive for tech innovation, giving the CCP more influence in global technology trends. So we would like for you, the audience, to pick one of these. There's no right or wrong answer here, but please pick one choice that you think represents how you feel about the issue or what you are most concerned about, and then we'll turn to our panelists. And Emily, is that enough time? I'm not going. I promised I wouldn't do the Jeopardy theme song during this, although it might slip out.
Yeah, we got enough votes in. I can share the poll results.
Okay, great. All right, so it looks like the middle choice about the increase of the CCP power on domestic in the domestic front seems to be what the audience is thinking about. I'm going to turn to our panelists, Matthew and Linda. What are your thoughts on this issue in particular? Oh, and I should say for the audience that the poll box, the result, you can close that if you want, or you can move it. You can move it to the side so it's not blocking the screen. Okay, thanks. Sorry, Matthew.
Not at all. Thanks very much, Yaya. Thanks very much, Emily. It's a fantastic report. You've laid out the context quite fully. I suppose to add then to your presentation, I think it's good to start with what DCEP is. You pointed, I think, quite accurately to the fact that it's a gigantic financial database covering potentially all economic transactions in China. And there's a deep policy background behind this, which is Xi Jinping, since at least 2015, trying to get greater control over China's economy for the purpose of eliminating financial risk. And so DCEP, in theory, allows the Communist Party to map, again, all transactions, economic flows into and out of the country, within the country, right down to the level of the individual and the institution. So where are the concerns? Because in theory, that's a very powerful tool, but the technology is neutral. Well, the concern, obviously, as you mentioned, is that this can also become a tool of enormous economic leverage over individuals and institutions. And in a system like China's, I think it's fair to have concerns about how such a tool might be used. Another, I think, point, maybe more on the investment side, would be that DCEP has potential implications for Alipay and WeChat Pay and other payment providers. So another context, in addition to Xi Jinping thinking about risk, is Xi Jinping and the rest of the Communist Party thinking about regaining control over the private sector. And here the warning signs have been numerous, the most notable being the treatment of Ant Group's IPO late last year, and then all of the background against which that took place: antitrust, wanting to make the private sector more patriotic, again, concerns about private capital versus state capital. And with respect to DCEP, I think a really big concern here is getting China's banks ossified financial structures, which have really been outpaced by private sector competitors, who are now labeled in Communist Party documents non-bank institutions. It's an almost stigma that they carry. Banks have been outpaced. They need to get back into the game. They need to get back into the financial technology game. They need to get back into the regulatory game, and DCEP will allow them to do that. Final point, which Emily made right at the end, which I agree is really huge, is the geoeconomic piece. All during the summer of 2020, as the measures of the last administration were beginning to take hold, there was widespread complaint at the top levels of the party's financial system about SWIFT, about the US sanctions regime, and about international financial architecture favoring the United States. And so DCEP is potentially a step forward toward beginning to punch holes in sanctions, in SWIFT, and in the current global financial architecture.
Thank you. And Linda, before you go on, a question came up, and maybe I should have stated it so people know. When we're talking about DCEP, we are talking about a digital version of the RMB, essentially. So just in case that wasn't clear. But go ahead, Linda.
Thank you, Yaya. Can everyone hear me? Great, excellent. Well, first of all, thank you, Yaya, for inviting me to come and participate in this webinar. I'm neither a national expert, security expert, nor a China expert. So I was initially skeptical as to why you would have wanted to invite me to participate. But then after I read the report, I saw the reasons why. In fact, I greatly enjoyed reading it. I'm a financial regulator and a central banker by background. So having read that report made me realize that I was now seeing parts of the elephant that I've been studying for a long time, but from a very different perspective. And so here, I've been focused more on, how can we develop a Fed dollar or a digital dollar, and seeing how the Chinese have been going about it is from more of a political and national security perspective has been quite interesting for me. So thank you very much. In reaction to this first question, for me, China's already been much more attractive for tech innovation. When I was at the Fed, I led a BIS Basel Committee working group on open banking. And for those of you who are not familiar with that term, open banking just means banks sharing your personal banking data with third parties. Usually those are fintech companies. So in the process of that work, we spoke with several executives at Tencent, and they walked us through how they determine who is eligible for microloans. At that time in China, only a small percentage of around maybe 20% at most have an official credit score. So it's quite difficult to get a loan from a state-owned bank. And so if you're a farmer living in a rural village, it's most likely that you don't have a credit score, and certainly very unlikely that you can get a loan very easily and quickly from your local bank. So, what Tencent did was really transformational, especially for those who traditionally didn't have access to the Chinese financial system. WeBank, can take your activity on WeChat and assess if you have a normal profile. In other words, do you have a family? Do you have friends? A steady history of posting and chatting, with also a steady group of a network of associates. In other words, do you portray typical chat behavior? And so for me, my mind was blown away by that, because their ability to analyze that kind of human behavior is beyond many of what our fintechs in the US have today. And more importantly, their access to non-traditional data is exponentially greater than what our fintechs in the US have right now. However, this raises very important questions about what are our national values around sharing personally generated data. We may or may not agree with China's data sharing regime, but at least they have a clear framework, which is there's an expectation the government will have access to everyone's personal data. So they should just assume your personal data is not private, it's public. But we in the US, we do not have a national data strategy. And more importantly, we do not have a comprehensive data rights regime, and certainly nothing close to what the EU has with their GDPR. So I think this is a really important report in that it raises important questions for us as a country as to what would we like to do in terms of supporting the growth of a strong and resilient data economy that's open.
Thank you. Thank you. I mean, that's a great point. And, I'll probably just say one thing before I hand it off to Emily, because I thought about this question too. And I think you all have laid it out from different standpoints, right? But very important issues. The thing that sort of came to me, and I kind of went with that middle response of the domestic control, because in my mind, looking at this, there are a lot of things that are questionable, what might happen, but the sort of domestic control is probably the most certain. It's the one that's less, it's not going to be dependent upon so many external factors. It's just straight data. They will have more data. And so that's probably the thing that came out the most, that this is a lot of power for one government to have, to paraphrase a movie line. Too much power for maybe one government to have. Governments have not had, there have been manifestations of it, as you mentioned, right, Linda, in terms of even the private Chinese fintechs. But now this is giving government a direct line, which previously it didn't have, and any other government hadn't had such a direct line to data. But Emily, I'll pass it on to you for either more comments or to go to our next question.
So my thoughts are also fairly short on this. I agree with most of our audience here that option B seems to be the most eminent concern. Option A, which is the scenario where DSEP will help China internationalize the RMB at the expense of the USD. It's really a low likelihood event in the future for RMB to truly internationalize. Chinese government will have to make very momentous changes in its policies, such as loosening capital control. Option C is possible, but given the CCP's close monitoring and tight control, it's questionable whether that would actually encourage innovation, which often needs a lot of running room on the ground to thrive. So that's all my input. I feel like everyone has covered fair ground on this. And I can go to the next question. Let me make sure that I'm sharing it. Is everyone seeing this on the screen? Awesome. So we'll give the audience some 30 to 40 seconds to read and vote on this second polling question. Since China is developing a central bank digital currency, what should be the United States plan of action? And also just a note for the audience, if you have any questions, feel free to use the Q&A functionality. We will try our best to get to all of them or some of them at the end of this event. Thank you so much. Okay, I think most folks have voted, so I'm going to end the poll now and share the results. Interesting. So I think most of our audience think option C, move aggressively on an alternative way forward, such as leveraging the private sector's digital currency innovation instead of developing a government-designed digital currency. I think, Linda, given your background in financial institutions and regulations, we're very keen to hear what your thoughts on this. Perhaps we can go to you first and then go to Matthew. You could offer up your thoughts as well, especially since you recently co-authored a report with ASPI on China's central bank digital currency.
Thanks, Emily. Well, the other hat I wear is as the global head of policy at Transparent Financial Systems, which is a fintech startup developing a digital dollar payment solution. So of course I love option C, but putting that aside, we need to look at things a bit more macro. The US has two powerful international tools. The first being our military, and the second, which is often overlooked, is our US dollar. After World War II, the powers that be got together at Bretton Woods, they agreed on using the US dollar as the reserve currency for reasons I'm not going to get into now, but this gave the US immense political power, not only politically, but also in trade and finance. But it also gives us immense responsibility in managing the US dollar responsibly. The Fed has to be and will be probably the most conservative of all the central banks in experimenting with CBDCs because of the role of the US dollar. We need to think very carefully, okay, what is going to be the unit of account, the medium of exchange, and the store of value? Do we want it to be blockchain based or do we want an account based system? These are all very careful design questions that the Fed would need to carefully examine. And then secondly, actually very importantly, is, do we want this to be a wholesale a Fed dollar or a retail one? How do the commercial banks in our US system, in our fractional reserve banking system, fit into the overall digital currency system? So it's a question and a pursuit that we have to pursue to the end, but it needs to be done carefully. But there are many private sector companies out there who are developing different flavors of the digital dollar. And I joke that at the end of the day, we'll probably have our Baskin Robbins, 31 flavors of digital dollars, and some of them may be more popular than others. But just as we have now in the US, a system of multiple payment networks. We have ACH, we have FedWire, we have RTP. I can go on and on about even those that we don't really use that much anymore, including also, mailing checks via the postal system, which actually is still quite popular. I think we'll also have, in the end, a myriad of different types of digital solutions.
I'm learning a lot from the central bank point of view here. So,
and likewise from the national security point of view.
That's what we want to do.
all I would add really, so in terms of recommendations, there's a great paper, just a flag by Martin Trorzempa at the Peterson Institute, which I think is now available on SSRN. I want to give a shout out because we spoke to him early in our project and he was extremely helpful. But it's a fantastic paper. It addresses the issue of first mover advantage and whether it is in America's interest to catch up, so to speak. And I don't want to speak for the research of him and that of his co-author, but my basic takeaway was that we shouldn't rush. There's not necessarily a huge first mover advantage here. The technology is going to change really, really rapidly. And so it's important to get it right, as I think that Linda was saying also. That being said, we've mentioned the geoeconomic dimensions, and if I had to come up with a quick list of 3 recommendations, I suppose one would be to at least build the capacity to be able to monitor closely what is happening in the world of financial technology outside of the United States, and then to be able to take that into consideration when making policy decisions, because it's not just China. This is potentially an exportable technology stack. It can impact the economies of other countries as well. And that gets to a second point, which is, I think, if we agree that also getting the private data piece right, it's very important to have conversations with allies, with other stakeholders around what the important sort of criteria are for banks, financial technology companies, others being able to access user data. To what degree should they be able to track activity and behavior? And I think then there's also a third point, which is to say that there is going to be a lot of great innovation taking place in the United States. This is an extremely valuable area in many senses, both financially and for investors, for the global system even. And so from a US perspective, again, I think then the conversation moves toward how to protect fintech innovation in the United States. This is an emerging technology. It's a very valuable technology. It's a technology where there are already leaders based here in the US. I know we're having very tough policy discussions right now around the issue of how we protect emerging technology, protect our innovative sectors while at the same time keeping the economy open, keeping it inclusive, making America an attractive place for people to start companies, innovate, et cetera. But at the same time, I think there is a key national security dimension here in terms of making sure that technology is adequately regulated and protected.
Very, very good points. I appreciate that from both of you. And I'm actually going to move on to another question. Emily, can we put up another poll question for the audience? So this is an important question. This actually relates to some of what I think both of you all mentioned, right? If DCEP is launched and made available to folks outside of China, what should be the US response? One of banning DCEP, or just wait and see and then consider options? And really the background to this question is the concern about financial data. How will financial data be potentially used by the central bank? So this is a shorter question. So once we think people are ready, why don't we see what people think?
Still waiting for a couple votes to come in.
Okay.
It's interesting this oscillation between the options though, because people seem to not have a very unified answer on this.
Yeah. I mean, this is a thorny issue. So maybe we can, actually talk about that. The backdrop is, what did the previous administration do with TikTok? And, so, I think we point out in the paper that, if there's a concern there, there probably will be additional concerns with DCEP, which is a more direct line to the PBOC. So so why don't we see what people are saying? Ah, okay. 75% of you say immediately ban DCEP use in the U.S. In order to prevent collection of U.S. citizens' personal financial data. That's really interesting. Emily, did you have thoughts there on
Yeah.
that?
So I think our policy community would need to spring up into action pretty quickly. So I also am leaning towards option A. There is a general need for further thinking in the national security community, specifically on security vulnerabilities related to foreign data access that arise from economic and technological interconnection between the United States and China. So while we do not have any answers right now as to what the best course of action really is, different agencies would really need to meet to identify upfront this emerging concern, which is hopefully what this report will contribute to as well, and what to do about it. And this approach, at least my thinking so far on this, would map onto option A much better than option B.
Mm-hmm.
And on to you, Yaya.
Yeah. Yeah, no, and I'll say before we, move on, I'll actually answer this differently, which is, the question talks about what the U.S. should do, but I'm going to highlight maybe our focus is too much on what the U.S. government should do, and maybe it should be on what what the private sector could do. When I pulled up my phone earlier today, I mean, I don't have WePay or WeChat or Alipay personally, but I just went on my phone and I went to the App Store and I saw that I could download it. So anyone can use those here in the U.S. You can access those apps, right? And they're good, for obvious reasons, right? It's beneficial to folks that want to transact. But the question now for the tech community might be, is DCEP just a great innovation, right? So everyone should download it, or are there concerns about potentially not only just exploitation of data, but how this mechanism could be used to stifle, political speech, et cetera, et cetera. I mean, that's always a concern, right? But this is a very direct concern. So I'm not going to say immediately ban. I'm not even going to say wait and see. I'm actually going to say that I think the private sector needs to be thinking about that question before someone from Treasury or from Commerce does. Let's move on at least to maybe do another, one or two poll questions if we have time to get the other panelists involved. Emily, could we put up the next question? All right. If the PBOC does have direct access to people's daily financial transactions, who do we think it'll have the greatest impact on?
Maybe just 10 more seconds as people cast their vote.
Yep. And I'm really curious because one of the questions here, or one of the answers, that about general financial crime. I mean, we look at this through the national security perspective, but we have to admit that there are probably going to be some practical benefits in terms of crime. I'm not trying to influence the poll, but just sort of flag that we don't see this in a one-sided way or one-dimensional way.
I think we're ready to share. I'm going to end the poll right now. And sorry, Yaya, you weren't able to influence. So if you were, I know you said you weren't trying to do that. I can maybe offer up some comments as our panelists also try to think about what they wrap their heads around this result or just the question in general. I would imagine it would be whichever group the Chinese party leadership deems to be most integral to China's internal stability. This sounds like a cop-out answer, but really this way we can make a good case for, let's say, option C in terms of maintaining the stability of China's financial system, in terms of managing private actors in that system, We, however, could also make the case for option A if the Central Commission for Discipline Inspection and other control instruments can keep tabs on 90 million strong CCP membership. Scaling up to the whole society might just be a matter of time. And I don't know which one of our panelists wants to tackle this question. Perhaps Matthew? Sorry, I volunteer you.
Of course. I think financial crime is obviously a key target when thinking about how DCEP can be used in the context of law enforcement. There was a wonderful talk given by former head of the PBOC, Zhou Xiaochuan, within recent months, in which he said specifically that DCEP would not be used for anti-corruption purposes. And unfortunately, other Chinese officials in the financial system, in the banking system, when talking about DCEP, have said exactly the opposite, to the point that, as you mentioned at the very beginning, Emily, the website of the Central Commission for Discipline Inspection frequently posts articles about DCEP and interviews with those who are involved in its development. So it's very clear, it seems to me, that regardless of what's being said outwardly, DCEP is going to feed right into China's permanent anti-corruption drive under Xi Jinping and potentially even under, or likely under, further future leaders, rather. That being said, I think we can all agree you don't want corruption in a political economy, state-owned or otherwise. China's leaders have huge concerns about the state-owned sector as well as the private sector and how it's abused and its resources are siphoned off through corruption. But that being said, and I think the list of answers identifies this point, at least indirectly, there are other groups who are potentially or who are currently criminalized within China's system who could also be essentially cut out of the economy through a tool like DCEP. And so in addition to mentioning financial criminals and the corrupt, DCEP developers like Mu Changchun have also mentioned anti-terrorism, counterterrorism, the point about money laundering that somebody in the audience raised, I think very important. But those kinds of charges get tagged onto people who are in essence politically problematic from the perspective of the party state. So you can be accused of terrorism as a Uyghur, you can be accused of money laundering or economic fraud as a member of the Falun Gong. And that's where the line gets very blurry. I don't actually dispute that there are legitimate law enforcement purposes that might be pursued through DCEP, but I think the slope gets very slippery depending on what groups we're talking about.
Very, very good, Matthew. Thank you for that. You know, these are, you know, these comments are very insightful, and I think the audience has actually posed several really interesting questions. Why don't I actually turn to the Q&A? We have, you know, less than 15 minutes now. I'll ask a question, and then the panelists, hopefully you all can respond. So we have a question. Can the panelists please comment on trends in other countries to adopt DCEP-like tools? And what should be the US posture on this going forward? This is, I think, something we've touched on. So what do we think about this? If other countries actually try to follow in the same route as China and the PBOC? Who would like to jump in on that? Okay.
Well, I could start.
Okay, go ahead, Linda.
Well, I guess I'm going to take the liberty of interpreting DCEP-like tool as just any central bank digital currency. If the person who asked that question meant, having total access to all personal data. That will be a question I will save for Matthew. But with central bank digital currency, good number of jurisdictions around the world are actively researching, including us, the ability to develop central bank digital currency. And some countries are farther ahead than others. Sweden is a very good example of a country that's actually done quite a bit of work and is already using CBDC. But it really helps when you have a smaller economy and your currency doesn't travel outside your country that often. So, it's I hate to raise these countries as a comparison for the U.S. China is just markedly different in that it is very large. But what's interesting about China is that the renminbi often stays within borders. So I think it does really make it easier to experiment with CBDC. There's a very good tracker on the BIS website. If you go to the BIS website and just Google CBDC tracker, you can see which countries are exploring CBDC and how far along they are. Bank of Canada has done quite a bit of work, and so has the Bank of England. And going back to the previous question, I am not an AML expert, but I want to just kind of bring in also the monetary aspects for, say, a central bank having access to that much personal transaction data. For example, the UK government just gave a very large grant to the University of Edinburgh to set up a data center where it will pull data from disparate sources and try to aggregate them in a way that can be useful for the Bank of England and also for the UK government, and help them figure out, where is, the best place to use public spending, where are people shopping, how are they saving, what are their economic priorities. So there are those kinds of uses. Once you aggregate the data, it can be quite powerful.
Thank you, Linda. Other thoughts from folks on, and maybe we should look at the question of some of the more privacy, some of the privacy concerns, and some of the authoritarian potential for DCEP. Actually, maybe I'll just say this, because I think one way to look at it is obviously different societies and governments are going to have different takes on how to deal with financial data and how to deal with privacy. I think a concern that came as I thought about this development is that it really depends what government wants to ask the question. Emily and I were talking earlier about that we noticed in all of the press and publication about DCEP within China, right? There's not a lot of conversation, at least publicly, that we can see about the vertical data, protecting privacy. Now, the PBOC officials do mention that there will be privacy horizontally. Users of DCEP will not all know, the ID of everyone that they transact with. But we're not hearing publicly a discussion about, well, what are the protections, right? Because as was mentioned before, we're assuming that the PBOC would say that, well, it's all fair game. And with that, I think it means that any other government that has the same stance would probably not ask these questions, right? So I think there is, this is where the standard setting and the discussion, the global discussion about, well, what should be the norms around a CBDC have to happen. Because if you go to country X, I won't necessarily name names, just think of country X that has authoritarian leanings, doesn't respect privacy, right? That country sees DCEP and says, okay, yeah, all right, man, that sort of fits with our values. Let's implement it here. And now you have another country that has potentially, more vertical control of its citizens through fintech.
Well, I think that's why I have to reiterate my opening comment about why it's so important for us here in the US to adopt not only a data protection framework, but a data rights framework where, we control our personally generated data. And I think every country has its own, cultural norms around their comfort zone surrounding their private data. And there have been studies done, I think most recently by the BIS, that was quite interesting. In China, I think people expect that their data will be shared with everybody, especially with the government. But here in the US, we have a strong aversion to sharing our personal data with the government. But with companies, we're actually pretty cool with it. We are rather comfortable with sharing our personal data, as can be seen from the use of Facebook and all the different fintech apps that use our private banking data, for example. I don't even think people realize how much they share their data. But then you go to Europe, and Europeans actually have an aversion to sharing their data with just about anybody. And so it really varies from country to country. But I think we actually need to look not only overseas and observe what's happening in other countries, but then also be introspective about what are our values and implement them through legal rights.
Very, very good. Does anyone else want to say anything before Emily? Maybe you ask one final question. Okay. All right. So let's see, maybe we can get to another question. Okay.
I was just
Okay, go ahead.
shifting screens. It's still a little bit challenging to manage everything. Will China try to, so I'm picking questions out of the many great questions that you all submitted. Will China try to export DCP-EP to authoritarian governments as an instrument of control, which is kind of a theme that we've been discussing this whole conversation? Or will they place it as a neutral payment infrastructure and try to export it to unwitting countries as an instrument of information gathering? I guess this is just, it kind of depends on what kind of hat you wear. Are you coming from a regulatory perspective? Are you coming from kind of an innovation, private sector perspective? That's probably one of the core questions that I kept on asking myself and discussing with Yaya as we were writing this report. So I'll just hand it off to one of our panelists, perhaps.
I wouldn't mind jumping in. I think from the perspective of export of DCEP technology, that's obviously a danger. I can't say that in the sources I've seen strong emphasis there, but in terms of thinking about the digital belt and road, certainly there is a kind of bigger agenda within which DCEP potentially fits, which is the exporting of standards, the exporting of financial technology that links back to China in ways that, again, as we've mentioned, it seems from a longer term perspective could lead to the creation of parallel financial systems. When we first wrote the ASPE report, came out and there was a quite generous piece on the report, or using the report, that came out in the Financial Times that talked about global Gosbankification. Now, as someone who's been a historian, I love that reference because, what we're talking about is the potential for the world to be pulled toward different financial systems as a result of ideological competition that then spills over into the financial and economic space. And I think that's a real scenario. Whether you're a company or a government, it's worth thinking about how you would operate across different zones. It's worth thinking about how you can protect your data in areas that are, less, that are more intrusive, where data and law enforcement are combined in ways that can potentially be used against individuals and corporations. but not necessarily write off the option of doing business in, traveling in those areas, but it's going to require some thought. That's, I think, a key point. And just to add on to that, then from a national security perspective, from a U.S. centered perspective, again, I think this maybe gives a sense of what some of the stakes are. The U.S. has historically enjoyed a very, a shaping position in the post-1945 global economy. How will technology potentially, not necessarily, but potentially shift that position or affect it?
Yeah, and Matthew, Linda, great, and Emily, great thoughts, and it makes me think about, if I can drill down on the national security sort of framing. It's sort of a cliche. I was thinking about this earlier. It's a cliche to talk about geopolitics as a chess game, but I actually want to use that cliche in the sense that, if you're playing chess, so let's say there is a geopolitical chess game element to this. And if you are playing chess, right, if the other side, let's say he puts his knight through, right, puts the knight forward. The idea in chess is that you are, of course, right, the thinking steps ahead, 3 steps ahead or whatever. The aim, the way you strategize is not always, oh, I'm going to put my knight here. I'm going to do the exact same thing, or I'm going to counter that. It's more, you have an awareness of, okay, what does it mean that the chessboard is moving in this direction, that the pieces are moving there? What should I be thinking about? And then that helps you sort of, design your strategy. And I say that to say the question that comes up of, oh, does the U.S. need to have a CBDC, which I think we've sort of addressed. Linda, you really dealt with that the U.S. entree into this fintech area may look very differently. So if someone puts forth a rook or a knight, maybe I don't use a knight or a rook. Maybe I have a queen, and maybe I use my queen on the chessboard, right? So if I can, take that analogy, I think we've sort of come to the end, and this has been a great discussion. We actually had more poll questions, but we had so much discussion we couldn't get to them all. A lot of really great questions as well from the audience. I want to say before we let everyone go, because it'll be so abrupt, thank you for joining us. I also want to put out thanks to the CNAS staff that helped with this report. Sam Dorsheimer, who worked a lot on this report previously with CNAS. And I also want to give a last shout out to Liz Rosenberg, who recently has left and is at Treasury for really laying the great foundation for us to look at fintech here at CNAS. That's it on my end. Thank you, panelists. Thank you, audience. Have a great have a great afternoon. Bye bye.
Thanks.